Hello, friends. If you are receiving Social Security, Medicare, Medicaid, supplemental security income, or any other federal benefit right now, this is not something that is on its way. It is already underway. Right now, the Social Security Administration is actively reviewing accounts, sending out overpayment letters, and rolling out new monitoring and enforcement capabilities that have come into force this very year. The people being hit hardest are those who had no idea any of this was coming because nobody told them what to look out for, what the deadlines are, or what their rights are when that letter comes through the door. These processes are running right now. They are expanding throughout the rest of 2026. And if you receive any federal benefit or someone in your family does, there is a real chance one of these will reach you before the year is out. I am going to walk you through exactly what is going on, what 3 separate processes are running simultaneously at the moment, and what you can do while there is still time. Before we get into it, please subscribe to this channel and turn on the bell. I know everyone says that, so let me explain why it genuinely matters here. The rules around Social Security, Medicare, and federal benefit programs change constantly. And when they change, the Social Security Administration does not call you. They do not give you advance warning. They do not sit down and explain your options. They change the policy and expect you to keep up. The people who are subscribed here find out about these changes before they become a problem. The people who are not tend to find out afterwards, after the letter, after the deductions have already started, after the deadline to challenge has already passed. That is the difference. Hit subscribe, turn on notifications, and let us get into what is actually happening right now. The first thing you need to know about is the Social Security overpayment recovery process, and it is considerably more aggressive in 2026 than most people realize, and more aggressive than it has been at any point in recent memory. Over the past year, the Social Security Administration has been sending letters to thousands of benefit recipients telling them they were overpaid, sometimes months ago, sometimes years ago, and demanding the money back. We are talking about letters that arrive without any warning, state an amount you supposedly owe, and give you a limited window to respond before deductions begin. For people receiving Social Security retirement benefits, disability benefits, or supplemental security income, these letters are arriving right now. Reports from the SSA's own Office of the Inspector General and from advocacy organizations, including the National Council on Aging, indicate that the volume of overpayment notices being issued in 2026 has increased substantially compared to prior years. Here is what makes this particularly difficult. In a great many cases, the overpayment was not the recipient's fault at all. It was an administrative error by the Social Security Administration itself. Their own systems miscalculated an entitlement, processed a cost of living adjustment incorrectly, or failed to account for a change in circumstances that was reported properly but not applied in time. And the person receiving the letter had no idea anything was wrong. They spent that money on groceries, on utility bills, on prescription medications. And now they are being asked to pay it back, sometimes in amounts ranging from several hundred to several $1,000s, or, in some documented cases, tens of thousands of dollars from years of accumulated overpayment. Let me give you a concrete sense of how this situation unfolds in practice, because the details matter when you are trying to understand whether any of this could apply to your own situation. Picture a retired woman in her early 70s living on a fixed income in Ohio. She had been receiving a Social Security retirement benefit for several years. Several years ago, she took a part-time job at a local grocery store to supplement her income, worked there for about 14 months, and then stopped when her health made it difficult to continue. She reported the job when she started, and reported the income when she filed her taxes. What she did not realize was that there was a specific additional earnings report she was required to submit directly to SSA during the tax year itself, separate from her annual tax filing, because her earnings combined with her benefit exceeded a threshold SSA applies to people who claim before their full retirement age. When SSA eventually cross-referenced her earnings records, they calculated that her benefit should have been reduced during those 14 months, and they sent her a letter demanding repayment of approximately $4,200. She was devastated. She had done everything she thought she needed to do. She had paid her taxes. She had not hidden anything. But the specific SSA reporting requirement, which many people in exactly her situation do not know about, had not been met. She called SSA in a panic, assuming she had no options. She did not know that she could request a waiver of overpayment recovery on the grounds that the overpayment was the result of her not being informed of the reporting requirement and that recovery would cause genuine financial hardship. She did not know she had 60 days to file a formal reconsideration request asking SSA to review the underlying calculation. A benefits counselor who helped her file both the waiver request and the reconsideration eventually got the full amount waived. But she spent 3 months in fear that money was about to be taken from her monthly check because nobody had told her these options existed when the letter first arrived. That story repeats itself in different forms hundreds of times every month across the country. The letter arrives. The recipient does not know their rights. The deadline approaches, and money that could have been protected through a timely filing is lost simply because the person did not know to ask. What almost nobody knows is that you have rights in this situation. If you receive an overpayment notice from the Social Security Administration, you have 60 days from the date of the notice to file an appeal, formally called a request for reconsideration, asking SSA to review the decision. If the overpayment came about because of a Social Security Administration error, rather than something you did or failed to report, you can request what is called a waiver of overpayment recovery, which asks SSA to forgive the debt entirely on the grounds that the overpayment was not your fault and that recovery would cause you financial hardship. SSA has the authority to approve these waivers, but they will not proactively offer this option to you. You have to know to ask for it and submit the correct form, which is SSA Form 632, Request for Waiver of Overpayment Recovery. There is also the option of requesting a different payment plan if SSA determines recovery must proceed, but you genuinely cannot afford to repay the full amount quickly. SSA can negotiate extended repayment arrangements, sometimes spreading recovery over years, and they can reduce the monthly withholding amount from your benefit check to a level that does not leave you unable to cover basic living expenses. But again, none of this happens automatically. You have to initiate the conversation. The critical point is timing. Once the Social Security Administration begins taking deductions from your monthly benefit check, your ability to negotiate the terms drops considerably, and the process of appealing a deduction already in progress is slower and more complicated than appealing before it starts. If a letter has come through, do not set it aside and do not assume there is nothing to be done. Contact the Social Security Administration directly at 1-800-772-1213. If you want free assistance understanding your rights and options, the National Council on Aging's Benefits Checkup Service at benefitscheckup.org and your State Health Insurance Assistance Program, known as SHIP, can both provide guidance at no cost. You have 60 days from the date on the letter to request a reconsideration. That deadline is real, and it matters. Once it passes, your options narrow significantly. The second thing happening right now involves a new enforcement capability that has been expanding through 2025 and into 2026, and it is one that most people receiving means-tested federal benefits have never heard of. The Social Security Administration and the Department of the Treasury have been building out their data matching infrastructure under authority originally granted by the Computer Matching and Privacy Protection Act and expanded in subsequent years. And that infrastructure is more capable in 2026 than at any previous point. In practical terms, this means that financial institutions are now more routinely and more systematically sharing data with federal agencies to verify that benefit recipients continue to meet asset and income eligibility thresholds. For programs like supplemental security income, there is a resource limit of $2,000 for an individual and $3,000 for a couple. If your total countable assets, which include bank accounts, investment accounts, and certain other financial resources, exceed those limits, you are not eligible for SSI, and any benefit payments received while over the limit represent an overpayment. The challenge is that many SSI recipients experience temporary fluctuations in their account balances that can push them above the resource limit for short periods, sometimes without them fully understanding the rules. A lump sum payment that arrives in a month and is spent down before the next month, an insurance settlement, a one-time distribution, or even a delayed payment from another benefit that arrives as a larger than usual deposit can all temporarily affect eligibility. The rules around how these are handled are complex, and the consequences of not understanding them can be significant. What you must understand if you receive SSI or Medicaid is that you are required to report changes in your financial situation, including temporary changes that you believe will resolve on their own. Changes that need to be reported include any change in your income, any change in your bank account balances or other assets, changes in your living situation, or in who else lives in your household, and any lump sum payments, inheritances, gifts, or unexpected deposits. Reporting is done by calling SSA at 1-800-772-1213 or through your local Social Security office. If you have received any of these types of payments in the past and did not report them at the time, the right step is to address it proactively now rather than waiting for SSA to identify it through data matching and send an overpayment letter retroactively. The financial consequences are nearly always less severe when a discrepancy is self-reported than when it is identified through enforcement activity. For Medicare beneficiaries, a parallel issue involves IRMAA, the Income-Related Monthly Adjustment Amount. This is the premium surcharge that Medicare applies to Part B and Part D coverage when your income, as reported on your tax return from 2 years ago, exceeds certain thresholds. Medicare uses your 2024 tax return to determine your 2026 premium level. If your income was elevated in 2024 due to a one-time event, a property sale, a large retirement account withdrawal, or a significant capital gain, and has since dropped substantially because you retired or that event did not recur, you may be paying a premium surcharge in 2026 that is not based on your current actual income. This is not an overpayment in the traditional sense, but it functions like one from a practical standpoint. You are paying more for Medicare than your current circumstances would require, and the process for addressing it is straightforward, but requires your initiative to begin. You file Form SSA 44 with the Social Security Administration, documenting the life-changing event, which includes retirement, that caused the drop in your income, along with documentation of your expected current year income. SSA reviews the request and, if approved, recalculates your premium based on more current information rather than the 2-year-old tax return. People who file this form successfully are saving between $100 and $500 a month per person, depending on which IRMAA tier they were in. You can download the form at ssa.gov or pick it up at any Social Security office. Let me walk through what this looks like in a real household to make the stakes concrete. A retired couple in their late 60s, both retired within the last 2 years. In the year they retired, one of them received a large payout from an employer-sponsored retirement plan as a lump sum, which pushed their combined modified adjusted gross income for that year to over $250,000. Medicare looked at that income figure 2 years later and placed both spouses in an elevated IRMAA tier. Each is now paying an extra $260 a month on top of the standard Part B premium. Combined, that is $520 a month extra, or $6,240 a year, for Medicare coverage that the vast majority of beneficiaries receive at the standard rate. Their current income in retirement is approximately $60,000 combined from Social Security and a small pension. That amount falls comfortably below the lowest IRMAA threshold, but Medicare does not know that unless they file the SSA 44 form and tell them. Without that form, Medicare keeps charging the higher premium indefinitely, drawing it directly from their Social Security checks every month, and no one at Medicare or SSA sends them a letter suggesting that filing the form might be appropriate. The form exists, the relief is available, but the initiative to file has to come from them. That is the pattern that runs through everything I am covering in this video. The relief is available, the appeal is available, the waiver is available, the review request is available, but you have to know it exists and you have to ask. Nobody is going to call and volunteer it. The third major development, starting in July 2026, is the one that affects the greatest number of seniors, and it involves a significant change to how the Social Security Administration is handling disability benefit reviews that is creating both an opportunity and a risk that most current recipients have never been fully informed about. If you or someone you know receives Social Security Disability Insurance, SSDI, or supplemental security income based on a disability, your case is subject to periodic continuing disability reviews, in which SSA determines whether you continue to meet the definition of disability under their rules. These reviews have historically been conducted on different schedules, depending on whether SSA expects improvement in the individual's condition. Cases where improvement is expected are reviewed more frequently. Cases where improvement is not expected may go many years between reviews. Starting in July 2026, the Social Security Administration is implementing revised review scheduling guidelines that change the cadence of these reviews for several categories of cases. For certain categories of long-term SSDI and SSI recipients aged 50 and older, where the disability involves conditions that have historically been stable, the minimum time between reviews is being extended, which reduces the administrative burden on both SSA and recipients for those cases. That is genuine good news for many people. If you have been anxious about an upcoming review because your condition is stable and has not changed, this development may mean that scheduled review is further away than you were expecting. Here is where the risk lies, and it mirrors the pattern we discussed earlier. Under the revised arrangements, SSA will initiate fewer scheduled reviews on its own timeline, but your own obligation to report changes in your condition runs in both directions. If your health has significantly worsened since your last review, and your current award level no longer reflects the full extent of your limitations and associated expenses, you are entitled to request a review, and if approved, your benefit level can potentially be adjusted to better reflect your current situation. If you do not ask, your benefit simply continues at its current level, regardless of how your circumstances have changed. Many people in this situation assume that SSA will eventually catch up to their worsened condition through a scheduled review, but with the extended intervals now in place, that review may be years away. Requesting a change of circumstances review now, if your condition has genuinely deteriorated since your last assessment, is within your rights and may result in meaningful additional support much sooner. On the other side of this, if your medical condition has genuinely improved to the point where you are capable of substantial gainful activity, meaning you could work and earn above SSA's defined threshold, you are required under SSA rules to report that change. Continuing to receive disability benefits after medical improvement has restored your work capacity is an overpayment situation, and the consequences of that being identified later, rather than addressed proactively, are significantly worse than the consequences of self-reporting. Here's what that looks like in practice. A person in their late 50s received an SSDI award several years ago following a serious back injury. Surgery and subsequent physical therapy over the following few years produced significant recovery to the point where their doctor cleared them to return to light work. They did not report the improvement to SSA because they were uncertain whether they technically had to, they were not sure exactly what the threshold was, and frankly they were nervous about the process of having their case reviewed. Several years passed. SSA eventually identified the situation through a data match involving medical records from a federally qualified health center. The result was an overpayment determination covering several years of benefits, a substantial amount, combined with the stress and expense of an extended resolution process that included legal representation. The person acknowledged afterward that if they had simply called SSA when their doctor cleared them and asked how to handle the transition back to work, SSA's Ticket to Work program, which is specifically designed to help SSDI and SSI recipients return to employment without immediately losing benefits, would have given them a structured and protected pathway to do exactly that. The Ticket to Work program is a resource that deserves mention here, specifically because it is so rarely discussed in conversations about disability benefits. If you receive SSDI or SSI and you are interested in returning to work but are afraid of losing your benefits, Ticket to Work provides a safety net. It allows you to test your ability to work while keeping your benefits intact during a trial period, and it protects you from immediately losing coverage if you find that work is not sustainable. The program is free to use and does not require any upfront application fee. You can call the Ticket to Work helpline at 1-8669-687-842 to learn more about whether it applies to your situation. The time to address any discrepancy between your actual current condition and your benefit status is now, proactively, rather than when a review or an overpayment notice forces the issue. If you want to understand where you stand, you can request information about your disability review status by calling SSA at 1-800-772-1213. If you believe your condition has worsened and you want to request a review, ask specifically about a request for a change of circumstances review. If you are navigating any of these situations and want free guidance before you contact SSA directly, your local Social Security Administration office, your state health insurance assistance program, or a benefits counselor at a legal aid organization in your state can help you understand your position and your rights without charge. Let me now address something that becomes more important during periods of heightened SSA enforcement activity. Because every time news breaks about benefit reviews and overpayment notices, fraudulent activity increases in parallel within days. Individuals claiming to be Social Security Administration representatives have been documented making calls to seniors threatening benefit suspension, claiming there are problems with their Social Security number, or demanding immediate action to prevent interruptions to their payments. Some of these calls are sophisticated enough to spoof official SSA phone numbers on the caller ID display. They sound official. They use bureaucratic language. They create exactly the kind of urgency that makes people respond before thinking. The reason this fraud is particularly cruel right now is that the underlying threats it mimics are partially real. There are genuine overpayment letters being sent. There are genuine benefit reviews underway. There are genuine changes happening to disability review schedules. A fraudster who tells you that your benefits are about to be suspended and that you must act immediately is exploiting the same climate of legitimate concern that this video exists to help you navigate. The difference between the fraud and the real process is the channel of communication and the payment method demanded. Here is the simple and definitive truth about how the real Social Security Administration communicates. The SSA initiates contact with benefit recipients through United States Postal Service mail, not through phone calls demanding immediate action. The SSA does not threaten arrest, benefit suspension, or legal action over the phone without first sending written notice. The SSA does not accept payment by gift card, wire transfer, cryptocurrency, or any method other than official government payment channels. The SSA does not ask you to confirm your full Social Security number to a caller who called you. If anyone contacts you claiming to be from SSA and creates urgency around immediate action, it is fraudulent. Hang up. Do not engage. If you are concerned about a legitimate issue with your benefits, call SSA yourself at the official number, which is 1-800-772-1213, using a number you found yourself rather than one provided by the caller. Here is where things stand as of July 2026. The Social Security Administration is actively sending overpayment notices and initiating recovery from benefit recipients at an elevated rate compared to prior years. If you receive one, you have 60 days from the date on the letter to request a reconsideration and to file for a waiver if the overpayment was not your fault and causes financial hardship. Acting within that window is critical. Expanded data matching between financial institutions and federal agencies means that unreported changes in income, assets, or circumstances are more likely to be detected and pursued than they have been historically. If you have unreported changes, addressing them proactively is nearly always better than waiting for SSA to identify them through enforcement activity. Disability benefit review schedules are being revised starting in July 2026, reducing the frequency of administrative reviews for many stable long-term cases. This creates more stability for many recipients, but also places greater responsibility on individuals to report changes in their own circumstances, whether those changes are for better or worse, before the next scheduled review. None of this is straightforward, but knowing what is happening, knowing your rights, knowing the deadlines, and knowing where to get help is the difference between being caught off guard by a letter and being prepared to respond effectively when one arrives. Subscribe, share this with someone you know who receives Social Security, Medicare, SSI, SSDI, or any federal benefit. One conversation today, one video forwarded to a parent or a neighbor or a friend who does not follow this kind of news could make a meaningful difference before a letter arrives that they were not expecting and do not know how to respond to. The knowledge that you have rights, that deadlines are real but actionable, that waivers and appeals and review requests exist and are available to you, that specific official phone numbers and free assistance programs are there to help you navigate this without doing it alone, that knowledge is the difference between being caught off guard and being prepared. And being prepared is the entire reason this video exists. I will see you in the next one.